Today, we're going to learn about one of the most widely recognized financial statements, the profit and loss. It doesn't matter what you do in your career. Understanding a profit and loss will add huge value both to your professional as well as your personal life. Before we begin, go ahead and download this infographic and this Excel file to follow along. Okay, so the profit and loss. It's one of three financial statements, with the two others being the balance sheet and the statement of cash flows. Some people call it an income statement, but they really mean the same thing. It's designed to tell you about the profits or losses each period in your business. Here, let's have a look at an example. Here we have a profit and loss, and we're going to read this from top to bottom, starting with our first section, revenue. Revenue is synonymous with income. It represents the amount of sales that you are recognizing from carrying out your primary business model from customers. So, if you're selling chocolate bars, every time you sell a chocolate bar, you have revenue. Here are some other examples of revenue accounts. It actually doesn't matter what your business model is though. If you're recognizing income from your primary business model, then you have revenue. So if we go door to door selling chocolate bars, every time I sell a chocolate bar, I recognize revenue. If I sell 10 chocolate bars at $2 each, that's $20 in revenue. Okay, so the next section is cost of goods sold. In this section, well, it is what it sounds like. It's the cost of whatever you're selling. So back to our chocolate bars example. Your cost would be the actual chocolate bars that you sell. But there's no universal cost of goods sold for every business. Again, it all depends directly on your business model. The key question to ask yourself is, will I be able to sell my product or service if this cost went away? If the answer is no, odds are you got a cost of goods sold on your hands. Okay, here are some other common cost of goods sold accounts that you may find in a profit and loss. All right, now we get to our very first profitability metric, gross profit. Gross profit represents the amount of income that's left over after you subtract out your cost to deliver that income. You want this number to be as high as possible because each dollar that remains after each sale can either be invested back into the business or paid out to the owners of the business. If you have a negative gross profit, you don't really have a business, because that means every time that you sell something, you lose money. Okay, now we get to our next cost section, your operating expenses. Operating expenses are also what they sound like. They're expenses related to operating your business. So what are some examples of operating expenses? How about rent or legal fees or payroll? Now, although these items are commonly shown as operating expenses, again, it really depends on your business model. So if you're selling consulting services, then your payroll costs may actually be a cost of goods sold, since you need your staff in order to generate income. Here are some other examples of common operating expenses. Now that we're done with operating expenses, we're ready to move on to our next profitability metric, net operating income. That's the income that's left over after you subtract out your operating expenses from your gross profit. Now we have other income and other expense. Remember earlier when I said your revenue is your income generated from your primary business model? Well, say you make money from cashing in credit card points. That technically is income, but it's not from your primary business model. And because of that, that would go under other income. The same holds true for other expenses. Any expenses not related to selling your product or operating your business under your primary business model would go here. So common line items would be interest expense, which is a cost related to taking out debt, or depreciation expense, which is the cost of the wear and tear of your long-term fixed assets. Here are some other examples of other income and other expenses. Okay, so if we net these two other line items together, we get net other income, our third profitability metric. Now, all we need to do is add our net other income to our net operating income to get our granddaddy profitability metric, net income. Net income can be shown both before tax as well as after tax. It all depends on whether your business is profitable or not. In this example, we have net income before taxes, then a line item for our taxes, followed by net income after our taxes. Boom! We just went through a profit and loss from top to bottom. This net income line item is an important line item because it actually feeds into the other two financial statements. But that's a topic for another time. Until then, tell me, did you learn how to read a profit and loss? Let me know in the comments below. And if you enjoyed this video, go ahead and give it a like and subscribe for more videos on finance and accounting. See you next time.